Okay, so welcome everyone to today's Nistad discussion webinar presentation on tokenisation, digital assets, and the future of future UK investment products. Just a few points just to mention. If you probably caught the end of that, we had a few challenges with Teams. So some people we can see, some people we can't. So apologies for that. My PhD's in rocket science, so that basically means none of us really understand Teams. Secondly, I do have a bit of a sore throat, as you can probably hear. So if I do fade away half mid-chat, please don't adjust your sets. It's entirely me and my rather old voice falling to pieces. But anyway, so let's get cracking anyway, because this will probably take about half an hour. Obviously, we'll try and keep that as much as we can. So the first thing is I'll probably hand it over to Ada, who's the founder and the chief investment officer, chief executive officer of Nistad, just to maybe give a little 30-second background to what we're doing and where we're coming from and the services that we offer. Ada, if you want to start talking.
Good morning, everyone. Thank you for joining in today. So Nistad is a professional services consultancy. We're a boutique as we specialize in the investment management space and, looking at investment management systems, implementation, integration, and every solution around systems used mainly within asset management. Our core is in supporting with experts. So we have experts in the shop with experience from 5 years to 20 plus years, including myself. And my background is mainly investment compliance, investment rules, working within different regulatory jurisdictions and an understanding of how those rules translate from investment management agreements to actual monitoring of those rules from a systems perspective. So our services range from actual vendor selection, compliance and regulation, like I mentored. So we do investment guideline reviews, new systems adoption, new fund launch supports, looking at issues within existing systems, coming in to do a full review of an investment guideline process and sort of acknowledging issues there and supporting an institution with fixing those issues. We look at full technology implementation, so design configuration, systems integration, data optimization, and general system support. We also look at the whole operating model, business change, analysis, operating model design, strategy within technology, and general business process standardization and change management. So those would be our sort of core services that would support institutions with. Thank you, Paul.
Okay, cool. Thank you very much. Yes, and I think there's another slide here which Anna's sort of mentioned anyway. So about the speakers, obviously you heard Ada speak, and obviously there's a little bit about her there, and there's myself down there as well. So anyway, let's get on to the proper. So we're going to probably cover it in probably four main sections. Obviously, we've just done the welcome and overview. We're going to basically look at what the definition of tokenization and digital assets are, because it's a very confusing definition. People don't really understand them. They use the phrases interchangeably. But they are different. We'll then look at the UK regulatory landscape, because despite all the great, wonderful ideas of tokenization, digital assets, you do need to have a regulatory framework in place to protect the end investor ultimately. Moving down to number four, we'll look at the impact on products, funds, segregated portfolios, investments, and what have you, how it impacts the current range of products and the challenges and the benefits for the new products. And then we go down to risks, issues, challenges. Like most things, these things are never as simple as you see. And then we'll just do a little bit of a wrap up at the end. So if we just do the welcome and interview. So I think it's fair to say that, I got down there, the financial landscape is undergoing rapid digital transformation. I think you could probably put that quite more broader actually and say society is undergoing rapid digital transformation with everything is online, done by digital certificates and all sorts of stuff like that. I mean, if you look where we are now to say 15 years ago, it's completely different. And what I was trying to do was actually, and I'll do these slides together, was I was trying to find out basically how much sort of like assets are being traded through digital assets, just to set the scene. And to be honest, it was actually quite hard to get clear stats, but one stat I did find this Merge Gen research via, I think it was a Chat GPT search, who came out and says by the end of 2004, took about 11 and a bit months ago, or just nearly 11 months ago, 2.6 trillion US dollars was being traded, but within 9 years now, that will increase, 4 or 5 fold to 10 billion, sorry, $10 trillion, which is obviously a massive increase. So basically, this is a area of that is that firms and regulators and just custodians and depositories and technology firms need to focus on because it is going in the right direction. And this, and I will demonstrate this further on, that digital assets are and tokenization is really defining how value to end investors is created by quicker trading, investment management, less risk, more controls. And one of the things that UK is doing is actually trying to position itself as a leader in this financial innovations. For those who are involved in the industry of this, you can see there's various working groups at the FCA, Bank of England, Investment Association, plus others who are working on trying to make this as joined up as we can make it, really. But one of the things that and hopefully the driver behind this is that this whole area is quite poorly understood, and a lot false news or fake news, to use the current phrase, out there at the moment, and with very few firms having a strategy in place. So what we're going to probably do is then, obviously, before we dive into the detail around the regulatory and the impact of products and all the horrible risks and issues and challenges that we need to do, it's probably best to do a bit of definition of it because, again, I said before, these are misused phrases quite often. So let's think about what a digital asset is. Assets, well, I can state the obvious, a digital asset are items of value that are represented in a digital form. And they include things like cryptocurrencies, which obviously Bitcoin is the most famous or infamous. You have stable coins, which is a digital asset that's linked to another stable thing. For example, you can link it to the dollar, or you can link it to the FTSE 100, you can link it to the pound. NFTs, which are most complicated name for something that's so simple. Non-fungible tokens, which are tokens that can't be funged, or in other words, can't be changed. Why they didn't call them NCTs, I have no idea. And also tokenized securities and stocks and shares. For example, you've got, as I mentioned, there, you've got native digital assets, and when I say native, they are things that have always been digital, which are cryptocurrencies, digicurrencies are quite keen. You're going to have also tokenization, real world assets, property or funds. Concert tickets are now all on certificates. I've got a season ticket of rather very, very poor football team, and my season ticket there is a digital certificate as well. So a lot of the stuff is now moving towards this digital area. It offers a number of benefits. You can trade them pretty much 24/7. You're not tied into stock exchanges and trade and venues and MTFs and broker crossing platforms when they open and close. There are borderless, which basically means you can trade them across borders, which is not always a good thing, actually, because obviously it can open you up to risks and regulatory arbitrage, but there's a little bit more slides on that later. But we've done what digitization is, but what is actual tokenization? Because digital assets and tokenizations are two phrases that are actually linked and used interchangeably. So a tokenization is the process of converting ownership rights onto a blockchain. I mean, obviously, distributed ledger technology, as it's often called. A blockchain is a database construct or structure where you have loads of different blocks or tokens, in this case, all linked together. And the idea from that, each of them creates a unit of value of ownership and transparency. I mean, one example, which is outside asset management, I'm working for an ed tech firm. and the universities in Africa actually are looking to create their degree certificates on a blockchain. So you'd have all the individual assignments, all the individual learning objectives, and anything, personal details on a blockchain, which can act as your degree certificate. So basically, you can pick up the blockchain and take it to somewhere else. The advantages of tokenization is as follows, really. It allows fractional ownership. Um, so it allows you to own a part of an asset. So you can own part of a building quite quickly, as opposed to going through horrible legal processes. In theory, there's greater liquidity, which basically means you can buy and sell it, which basically means there's more access to the markets to buy and sell them. There should be faster settlements process. As everybody on this call knows, the world is slowly moving from T+4 to +3, +2, and T+1. And ultimately, the aim is to be on T. So you can buy an asset now, you settle it now, and the cash goes out now. And obviously, that will help if everything's digitized or on the blockchain. That's a lot easier and also lower costs. And enhanced transparency and traceability, which basically means you can see stuff a lot quicker. And again, some more examples here, which I've mostly spoken about really. You've got tokenized real estates, which is an American phrase for buildings, corporate bonds, or even government bonds, carbon credits, pieces of art, private equity interests, as well as football season tickets and concert tickets. So the key point to remember is that if you think of it as a Venn diagram, digital assets is the big circle, and the token or tokenization is a part of the digital asset. So broad character of all digital items, and where a token is a subset of digital assets created on a blockchain. Oops. They include cryptocurrencies, CBDCs, which is central bank digital currencies, which is a movement now for banks to create their own digital currency. I think China is obviously very popular at the moment, and I know the Bahamas are looking at the sand dollar in that area, and I think there's stuff for the UK to try and create an e-pound or something. And digital assets may or may not be blockchain, but tokenization is always block-based. But again, the phrase is often used interchangeably, but this table here, which I think I stole from somewhere else, is actually quite a good summary. So what is the regulatory landscape? So I think one of the things that you find with all sorts of regulation is that the innovation of products and services tends to move much quicker than the regulator. So the regulator is always so many weeks, years, months, decades behind. I mean, a prime example would be the credit crunch in 2008. We had a lot of, and I use innovation in single quotes, of mortgage-backed securities, credit defaults, collateral debt obligations, which are all very innovative, but the regulator hadn't really caught up with how to regulate them. So basically, they were completely open and flapping around in the wind. So when the credit crunch crashed or happened, there was nothing really for the regulators to do to try and help save the world. So the UK government has made digital assets and tokenisation part of its vision. I must admit, I didn't watch all of the budget yesterday. I must admit, I got a bit annoyed with all the rowdiness in the House of Commons, to be honest. But I don't think anything in the budget actually has changed that. Her Majesty's, or His Majesty's Treasury now, and the FCA are working to create a regulatory framework covering stable coins and crypto assets in payments. Obviously, we want to make sure that if a payment is made, it's actually it receives, and there's some sort of escalation if problems happen. In the same way you deal with normal cash payments. Ability to have a framework around tokenization, securities, and funds. So you have a fund called the Paul Taylor Income Fund that could be issued as a token on a blockchain, and obviously the assets within that could be buying stocks and shares around the world, and those stocks and shares can be tokenized as well. Again, very good idea, but obviously you have to make sure there's controls in place. Around custody, I remember the old days when custody was safe in the vault, but nowadays custody is from various CSDs, central security depositories. So you need to ensure that they can hold in some way digital currencies and make sure they can link back to a blockchain if they're there. Make sure there's good trading, and if you issue any new items, there's controls around that. And the other thing is around, I mentioned down, the Bank of England is developing a regulatory approach for a new central currency as well that could be or central bank currency that could be done. Moving on to the next item, there's also another item the FCA are looking at, and launched well last year actually, towards the end of last year to be fair, a digital security sandbox or DSS, which is not the Department of Social Security. But the idea of this digital security sandbox is to allow financial institutions to test tokenizations in a regulatory environment, but almost in a very protected area. So the idea of a sandbox, you have a copy of the real world, but completely segregated from the real world. So it's like a parallel universe. So you can test and test in it, and if anything goes wrong, you don't. It doesn't contaminate the rest of the world. It's not that common, as people would know, would do that sort of stuff on technology as well. Oops, let's get the slides working. Um, and another piece that's come out is that there was always a debate about what the ownership rights over a digital asset. So if you have a physical asset and you own a physical asset, say your house, there will be legal protection in place if you own the house on the land registry and all sorts of legal documents that no one really understands. But one of the challenges you had around digital assets, it didn't have that sort of protection. So the Law Commission has now clarified that digital assets can be recognised as property, whether that's I say personal property, personal could be an individual or a corporate or a fund or a government or a sovereign wealth fund. What basically means now it's very clear protection around ownership of that. It gives much more certainty for investors and institutions, so you don't have any arguments with a counterparty over who owns it. There's much more regulation now sorry, not much more collaboration between the regulators and fintechs and traditional institutions. So what basically means is while the regulators can actually come up with some, these are the rules. If you don't follow them, we're going to come around and have a coffee with you. You need the fintech firms to start developing technology to allow it to be supported. And the traditional financial institutions need to take them up. Until the big firms take them up, you're going to find it's going to be quite hard to take up. You might get a few niche startup players that are coming, but if the big boys don't take it up, they will struggle. And the UK is taking something which I actually think is a very good idea. Actually, I think it's a very good idea. Is same risk, same regulation. What it's trying to do is it doesn't want to try and treat digital assets. Say, for example, you've got a digital asset for some stocks and shares. They want to try and regulate them as if they were like traditional stocks and shares on that. So you don't end up with two different points of view. There may be some specific risks or some specific operational challenges, but they want to try and keep them all the same. Other things just run through there. This is more of a global area. So you've got the IOSCO, which is the International Organization for Securities. I think it's the Commission, and you've got FATF, which is the Financial Action Task Force, and they are primarily international bodies, effectively, who are trying to create harmonised or similar regulatory standards across the globe. So what we're trying to do there is, by all these areas all working together, we want to try and come up with a standard set of international regulations that are quite harmonised. So when people trade across borders, they've got the same sort of regulatory arena to work in. Um, so just to summarise before I dive on to the rest of the thing, is overall the UK is progressing. They should read, but with caution, which sounds very, very, very sensible. Um, and they're trying to allow the innovation to happen, but they do need to protect investors and market stability, because obviously the whole thing for the FCA is, two things: make sure that the market is stable so it doesn't end up around your ankles like it did in 2008, and we want to make sure investors are protected, sometimes from dubious firms, but often from themselves because they may not know the details. So we've covered obviously what tokenisation of a digital asset is. We've now talked about the regulatory landscape, which is, I would say, grinding into life. But the key thing is, obviously we all work for firms, or we're all contracted to firms. We all sell stuff to investors. So what we really need to do is ensure how digital assets and tokenisation will impact investment products. So let's run through that. Safe to say that it will allow various firms new ways to design distribution firms. Going back to the dot-com bubble, it allowed products to be issued and designed and structured in different ways. We're very fortunate in the UK, despite Brexit and a few own goals and rather dubious leadership on our political masters. The UK is still a market leader of investment and capital markets with a strong regulatory framework. So basically, we're very much at the top of the tree. So it allows us to try and capitalize on the move from the current world to the new digital tokenization world. So what is the impact to traditional products? Managers, and I've seen one fund, and I actually did a similar webinar with an asset manager whose name I can't remember actually, who actually issued all their shares in the fund or the units in the fund as digital asset tokens, which allowed instant settlement, lower costs, and allowed people to buy different bits of the shares. It took a while for them to get running, and there were some challenges which I'm going to speak about later, but it did work. The next area is tokenization bonds, similar and market minded instruments. Bonds, obviously, there's a process. If you want to, corporate bond, you want to issue, you want to money, and you want to get some money market instruments out there. It's not a 5 minute task to get them issued. So it will allow this stuff to be issued much quicker, and obviously get out there into the market and try and create the liquidity needed. Private market access, and this is also a key area at the moment that's going out there. uh, uh, Private markets and other things as well, like real estate or infrastructure, are traditionally very illiquid. You can only buy them when somebody wants to sell, or the block or the lot size you have to buy is quite substantial. So tokenization and digital asset allow much more visibility of what can be bought and sold. Also, it allows these assets to be sliced up into fractions, which allow them to be bought and sold quicker. Smart contracts, to be honest with you, I mean, they've been around. Anyone who's done a DocuSign would know that what a smart contract is. So, when you're opening and when you're enrolling, I mean, onto a new product, or taking coupon payments, or redemptions, renunciation forms and stuff like that, they can all be done digitally now, so you can do them almost instantaneously, as opposed to having lots of forms that have been passed around or putting side letters in place to try and go around it. So that really covers what the traditional products are. But if we just maybe sort of step up, we can look at the benefits to the UK investment ecosystem. Nice management consultancy word there. Again, a few bits of duplication: increased liquidity that are historically hard to trade, which is always a good thing. Reducing friction and settlement risk by clearing and record keeping. Again, we discussed that earlier, but it's the same thing across the industry. Um, Improve access and exclusivity. So, there were various assets I mentioned before. I used the idea of illiquid assets where, buying into them is very hard because you can only buy when somebody wants to sell. And if you do want to buy, you have to buy a sizable amount of it. Digi assets will allow them to be sliced up into smaller bits and traded much quicker, almost instantly. Enhance, because everything is digitized, there's much enhanced transparency and data integrity, which for the, I recognise a few compliance names on the call, which is very good for governance and also compliance. To ensure, are we following the rules? Yes, very good. If we're not following the rules, we've got the data to find out what's going on. Operational efficiency, well, again, I mean, I know back office and what have you often gets forgotten about, as sort of like the dirty men in the basement. But if everything's going to be automated through smart contracts, real-time processing, enhanced data, back office costs will drop dramatically, which basically means the fees and that firms charge to their end investors will go down. They haven't got a cost burden, and the scourge of my very first job doing bank reconciliations, they will be reduced as well because everything is much quicker. This obviously will then help with institutional market momentum. As I mentioned earlier, a number of global asset managers and banks are piloting tokenization of bonds, funds, units, and repo transactions. I mentioned I worked with a firm on a similar webinar type thing, roundtable on fund units, and it took a little bit of convincing their end investor, but it did work in the end. As I mentioned earlier, slight duplication from the earlier place. The London Stock Exchange is developing a infrastructure which obviously allows them their trading venue, which the London Stock Exchange effectively is, to cope with digital and tokens. Again, slight bit of repetition here. The digital security sandbox and the engagement of doing the safe testing ground, as I mentioned earlier, the idea of a sandbox. You have a copy of the real world in a parallel universe, which you can test on without any real risk of either causing problems or worse, contaminating the market proper. As I mentioned before, fintech innovators and traditional financial institutions are now starting to speak, bridging the gap between legacy systems. I've actually seen a few large financial institutions actually buy up some of the tech firms because they feel that having the knowledge within their building, as opposed to via a supplier relationship, was actually a good idea. Um, so this should hopefully give some sort of like strategic advantages for the UK. Um, the UK's legal system, despite what you read about, is actually pretty solid. The regulatory stance is also solid. So basically, we're on a very strong base, so we can add on overlays for the rules for digitisations and tokens on that. So we don't have to reinvent the wheel like some of our competitive countries will. The UK, sorry, the UN, sorry, UN, EU, US, and Asia are developing their own frameworks, but because the UK is slightly ahead of everybody else, so basically means that they may be able to, we can attract capital, talent, and technology, and investment and investors more precisely. But also means if we set the standard and become a market leader, it's very likely the EU, the US, and the Asia are more likely to sort of like follow what we're doing. So it helps with sort of like holistic platforms across the globe. And again, this is the final thing that, again, that hasn't been changed since the budget, which is tokenisation, with the aim to modernise its financial markets and enhance its competitive post-Brexit. Everybody knows that financial services is probably one of the biggest industries in the UK, so it's important that we stay ahead. So just do a very quick summary, really, on the products. Overall, I mean, over the next decade, hence that the 20, you may those who were listening earlier on, 2034, does it 10 billion US dollars will be traded, which basically means tokenized assets and digital assets will become mainstream portfolios blended with traditional securities. Yeah, they'll almost become something else. That's the norm. So therefore, what this basically means, there will be some digital native or native platforms will appear offering real-time borders and access to portfolios. So what it basically means, almost like that you have trading venues, maybe like London Stock Exchange digital asset version or Nasdaq digital asset version that will appear up in parallel, that will allow these assets to be traded on their own. Again, slight repetition. The UK does have a opportunity to shape global standards because of our market lead position and the fact that we're really pushing on the tokenization of digital assets. Okay, so we're getting there now. We're running a little bit behind, so apologies if I'm eating into your next meeting. So we've covered what tokenization is and digital assets are. We've had a discussion of regulatory landscape, which I think I would discuss as everything's starting to click into gear. I've talked about the impact to investment products, which is around, traditional products will need to change. Institutions obviously will need to get involved, but it will give a strategic advantage to the UK market, which is always good. But let's look at the risk, issues, and challenges that need to be managed, which is often where the tie hits the road and the devil in the detail appears. Okay, so as I mentioned earlier, it does give some significant opportunities, but there are important risk challenges, concerns, worries that need to be considered to make this actually work proper. The regulatory uncertainty, why I mentioned the UK is doing a sterling job to get going. These frameworks are still evolving around those particular areas. There will be differences between jurisdictions, which will create cross-border compliance complexities between the UK and investors, which basically means if you've got a UK, say an Irish-based fund that's been managed by a UK manager, but the fund has holders from all around the globe in it, you can have multiple compliance challenges and regulatory compliance challenges. It's no different to what happens now, but obviously it's something else that needs to be looked at. Ongoing updates around eligibility reporting and investment protection. As I mentioned before, the main reason regulations in place is to protect end investors. So as digital assets become more and more common, or tokenization becomes more and more common, more issues will come out, scandals and all, meat and drink for the Daily Mail. will come out, and there will be problems that will be popping up, and it would mean the regulations could change at very short notice, or best practice could change at short notice. Because, as I mentioned earlier, even though the assets are very good, and liquidity will be improved, but you do need some sort of like a sizable scale for liquidity to be good. Because no matter how quickly you can trade something, if nobody's got anything to sell, speed is almost irrelevant. So I think when tokenization start becoming mainstream, initially they will lack liquidity compared to traditional markets. But obviously, as the scale gets bigger and bigger and bigger, hopefully that liquidity issue will get diluted down. There's also the risk around digital assets and price volatility. I think we've all read the stories where somebody creates Bitcoin, goes up and down like a lift, and the price, 1 minute you're a billionaire, and the next minute you're completely broke. I think this is obviously there's a little bit of perception around it, and obviously some people, it creates a good news story, but there will be, it's the perception around here. If somebody thinks that something's very volatile, it will impact your confidence, which obviously means people may steer clear of them. Other risks and challenges is the top technology and operational risks. Um, Ultimately, despite all the wonderful things about tokenization, digi assets, they are effectively technology, and all technology will have bugs in it. Whether these bugs are design faults or just something not been done properly, doesn't make no difference. It still causes problems, which creates vulnerability. And also because this is very much based on technology, uh, everything's open to cyber attack, cyber risks. Again, the more you put on technology, the bigger the risk around cyber becomes. So it's a bit much like a seesaw on that. One of the other challenges, and I remember being a rather old person, is that when the dot-com boom came, one of the biggest challenges had was trying to integrate all these snazzy, sexy, really good-looking websites with a horrible piece of legacy software at the back. And firms still struggle with that. It's like 20 odd something years since that's happened. And this will be the same. If you've got a clunky mainframe custody system and you need to integrate that with a blockchain, that's not easy. And it could take a while to get operating properly, and and will be complex. And most operating models are complex at the moment, and therefore costly. Um, Again, slightly the same thing point actually, really, is that custody and the secure storage of digital assets remain critical. I mean, as a custodian, your job there is to make sure the safekeeper of the assets, make sure they're reconciled, make them looked after, they're not being given away or what have you, or anything along those lines. Obviously, when you're dealing with central securities depositories, that's fine. But now you're starting to deal with different blockchains, different platforms. Again, it's another bit of thing that needs to be thought about, and which obviously the more things you have, the more complex it gets. Legal and governance challenges. Again, a little bit of repetition earlier, but I thought it was worthwhile bringing up on this section just to stroke to sort of like give it some focus. Um, as I mentioned, the UK has good legal recognition of digital assets as property or something that you can own, but it does different countries are different jurisdictions. So one country may not have this law in place. So therefore, you've got to be very careful if you trade in those jurisdictions to make sure they're okay. Because there's challenges around legal recognition of ownership, there's dispute resolution mechanisms and structures can may not even exist, or best be very complicated, or best even better, they may actually be different across different areas. So it's a none of this stuff is insurmountable. It's another thing that needs to be considered. One of my least favorite subjects, apologies, is AML and know your client. I mean, everybody knows that anti-money laundering regulations and checking is very, very hard to do. And know your customer stuff regulations is also hard to do in a sort of real-time instant trading world uh, with no borders around. Anti-money laundering checks are going to be even more complicated, and know your customer regulations just as complicated. I mean, obviously you need to know you're not selling to a Russian dictator or anything like that. But obviously, again, it's these are things that need to be implemented into the operating model to need to be considered. And one or the other is market adoption and education. One of the things that we've found over the years is a lot of people get a misunderstanding about things. Is not because they're stupid, but because they don't understand. They haven't been told about it. Lack of education. And if you've got a media or a constant press briefings that are saying A, B, and C, people will believe it. You know, why wouldn't you if you've been told all the time? So therefore, it's very important that when the rollout of digital assets and tokenization happens, is that there's proper market adaptation and education. Retail investors are probably likely to lack most lack an understanding of assets because to them they may not be a sophisticated investor, and along those lines, why would they? I mean, to them, it's digital assets part of their pension. You're 40 years of old. I'm not going to retire for 20 years. Why do I worry about it? I've even found that some institutional investors don't actually understand it as well, which is even more worrying. Really, you think they should understand it. Um, this is a very interesting point. Misalignment between investor expectations and product characteristics. Ultimately, as I mentioned earlier, we need to develop new products to take advantage of tokenization, digital assets, or even cope with the current challenge in tokenization, digital assets. But basically, if those products aren't suitable to customers, they won't get sold. So there's this often balance between these two here. You have to make sure that what you're selling and designing can actually meet the investor's needs. If you don't, apart from the fact that investors could lose money on it, which is not very good, reputational damages will come out, reputational issues will come out. And I'll do the last two together actually. I'm conscious they are the same. Um, with any new technology, there needs to be some sort of social acceptance onto it. People may understand what digital assets are. They may understand what tokenization is, but they may understand the pros and the cons and the challenges, but they may not be happy or comfortable doing it. It took like for many, many years for the hole in the wall machines, ATMs, to become acceptable in the 70s and the 80s. It's only when they started shutting branches and people started using them. So as well as getting everything in place, you ensure that you take your customers and your brokers and your management on a journey to ensure they understand what's going on. I know some firms are very keen on this, but other firms will find this a little bit of a challenge to get their head around. Again, slight duplication around systemic and cyber risk because it is tokenizations are based on blockchain, and obviously digital assets are based on central registers. If a network has major outages or a data center goes down or cloud service crashes, and I think one of them happened the other week, you could actually lose all your assets. So obviously you need to put that into your planning. And also, again, because everything is fully digitized, everything is really going to be open to more crime. Again, I've stressed this a few times, but I think it's very important people think about the challenges you've got. So the key takeaways is, as I mentioned before, digital assets and tokenization hold transformation potential, but their adoption and their success managing the regulatory changes, which are evolving in the right direction, but they're not there yet. Technical challenges, especially sort of integrating cyber risk and integrating to old systems. Operational changes on there, because new processes need to be done, and market risks, these new assets until they've got sort of like a scale, they'll still have a large amount of liquidity challenges. And the other on there, which I haven't put on, but I should have put on there, is around social acceptance. You can have all these sold, but if your clients aren't comfortable with them, they're not going to use it. So, so therefore, we're almost at the end now, and apologies for running a little bit. Wrap up and key takeaways. Digital assets are becoming central to finance. Again, that's the central theme of this. I mean, they are here, they are getting bigger and bigger, and they won't go away. And it's a revolution how assets are owned and trained, which is a good thing. And it gives a great opportunity for the UK to lead innovation on this, because it's a big thing that's definitely going to happen. But, and I put the word real challenges. I mean, these are real challenges. It's covering the whole span of the technology, everything from trading the underlying assets to clients, to reporting to compliance. So they would need to be overcome. So it's like most things, when you go into these new projects, these things come in with your eyes open, as opposed to coming in and don't focus on the good points. There are some down points, they can be resolved, but be aware of them. Okay, so that's where we are. We've done everything now. Thank you for listening. I don't know if Ada has any final points you want to mention at all.
Thank you, Paul, for this. And yeah, final point. Thank you everyone that joined in. If you wanted to contact us further, whether regarding the topic we've discussed today around tokenization and digital assets or around our services, our contact information is on there. And my colleague Nicola, Nicola, do you want to quickly say something as well? So the audience knows who you are in terms
Yeah,
of
thank you.
yeah.
So yeah, I support Nistad sort of across our operations really, but focusing on both developing client and contractor relationships. Anyone that's joined, I will send you the slides